Jared Dillian. Own your money, own your life.
I'm Jared Dillian. This is the Jared Dillian Show. We're talking, I just gave you a sneak preview of what we're talking about. We're talking about growth stocks, and you'll see why this is important. If you want to call, please call 844-305-7800. That's 844-305-7800. This is the Jared Dillian Show. So we just talked about how growth stocks are taking a big digger and how value stocks are going up. And this is important, like I said, because growth stocks have been outperforming value stocks for over a decade. Now, there's points in history in which value stocks did well. And one piece of history that I want to point out in particular is after the dot-com boom. So from 2000 to 2003 is when value stocks did really well. And that's actually an important period of time because if you think about it, dot-com stocks, the NASDAQ index, the NASDAQ composite index, went down almost 90% in that market crash, went down almost 90%. The S&P 500 went down 50%. Value stocks went up, right? So think about it. You could have had 100% in stocks. You could have been fully invested in stocks, but if you were invested in the right stocks, not only did you avoid all the carnage from the dot-com bubble, but you actually made money. But that would have been an extraordinarily contrarian thing to do. Because at the time, people were going bananas over Yahoo and Inktomi and freeinternet.com and LoudCloud and like all these dot-com stocks. Nobody cared about Philip Morris. Nobody cared about Procter & Gamble. Like, nobody cared about these stocks. But if you bought those stocks from 2000 to 2003, they went up when everything else went down 90%. So that's why this is important. So, a lot of people say, well, just buy stocks. Just be 100% in stocks. Well, what stocks? It matters. It actually matters, like what stocks you're investing in. It's more complicated than that. And you can slice and dice it a million different ways. You can do growth, you can do value. There's something called blend, which is a little bit of both. You can do big stocks, which are large cap. You can do medium-sized stocks, which are mid cap. You can do small stocks, which are small cap. You can do different sectors. You can do healthcare. You can do, there's a million ways to blow yourself up in the stock market. Just because the stock market is going up, somebody out there is losing money because he's in the wrong stocks. So the fancy name for this term is called dispersion. Right, just because the market is going up, there's a lot of stocks that are going down. That maybe this is obvious. I don't know. But let's get back to this growth and value thing. There is a guy out there who has a huge following. He has a massive following. He who shall not be named. We will not say his name, but he has a massive following. And his investment advice to his followers basically consists of you want to be 100% in stocks all the time, 100% in stocks, growth stocks all the time, 100%. And actually, it's funny because he calls it, it's so ignorant. He calls it growth stock mutual funds, but he hyphenates the growth stock like it's it's not hyphenated. You don't hyphenate growth, but he's just a donkey. Like it's just growth stock mutual funds. So, and basically, I'm not kidding. I'm really not making this up. This is how simplistic and idiotic this is. His rationale for saying that you should be all in growth stocks is because they go up more all the time. First of all, we're not even talking about like risk-adjusted returns. We're not talking about, returns and taking into account volatility because on a risk-adjusted basis, they're probably worse than value stocks. So, growth stocks are volatile, right? So you can invest in 100% growth stocks and they're going to be super volatile. We're not even talking about that. I'm just going to challenge this idea that growth stocks always go up more. I mean, we've sort of had like variations on this discussion for, the last few weeks. It's insane, right? People do this thing. They're like, well, just because, it happened in the past, therefore it's going to happen in the future. And by the way, growth stocks have outperformed over the last 10 years. But if you look back over 100 years, it's basically even. Sometimes it's value, sometimes it's growth, sometimes it's value, sometimes it's growth. And to just say you should be all in growth stocks all the time, not only are you exposing yourself to an insane amount of volatility, but it's just stupid. It's just a wrong statement. They just don't outperform all the time. And what we just witnessed in the markets, is an example. It might be the turning point where value stocks start to outperform. What a simpleton this guy is, man. It's just like you were not an expert on finance. You were an expert on the Bible. Like, stop. Like, your view of Wall Street is clouded. This is literally my life, right? So, when I worked on Wall Street, I worked first in index arbitrage and then in ETFs. But basically, what those two businesses have in common is that they're program trading businesses. So I don't know if you know what the term program trading means, but it basically means trading groups of stock all at the same time. So, and you would use a program. Like, I have a computer right here. I would turn over to the computer and I would select a basket of stock and I would sort of right click on it and say send tomorrow. I just trade like baskets of stock at the same time. It's program trading. So I basically was exposed to not just growth and value, but the factors and all this stuff very early on in my career. I know a lot about this stuff. And, when factors trend, they trend and trend and trend. Growth and value, the crazy thing about these growth and value trades is that they go on for years. We just saw it goes on for like more than 10 years. But when they turn, they'll go the other way for 10 years. I mean, this might be the beginning. Maybe value outperforms for the next 10 years. So if you listen to this guy, in his one-size-fits-all ridiculous solution is to go all in growth stock mutual funds and then value outperforms for the next 10 years. I mean, this guy, his tomb is sealed. All of his followers will lose money taking this advice. So I'm not saying that value is necessarily the answer. I'm just saying that, like, it's you can't put all, just to use a old cliche, you just can't put all your eggs in one basket. You need to have some kind of diversification, and diversification not just between stocks and bonds, but even within stocks, diversification within growth and value and small cap and large cap and stuff like that. Because you can just have big divergences in this stuff. So, people have gotten rocked in the last couple days on this trade. And then they look at the Dow Jones and it hasn't moved. Like the Dow Jones the last couple days, like the market's been still. And literally you're having like billion-year events going on underneath the surface. And by the way, if you owned one of these growth stock mutual funds, I would guess the average one in the last week is probably down 7 or 8%, with the stock market completely flat. Like that's why you don't do this. How many times do I have to say it? There is no silver bullet in investing. There's no magic beans. There's no magic potion. There is not one single thing that you can do repeatedly over the course of your investing career that's going to continue to work. See, here's how this works. The stock market is a game, okay? And the game exhibits this property we call non-stationarity. You should memorize that word, non-stationarity. This is very important. Non-stationarity means that this is a game where the rules constantly change. So imagine, like, if you were playing Monopoly and you landed on Baltic Avenue, and instead of paying $4 of rent, you paid $2,000 of rent. Rules changed. Like, how do you function in an environment where the rules constantly change? That's what the markets are. The rules constantly change. They change from day to day, week to week, month to month, year to year. They always change. So in order to function in this kind of environment, you need to be adaptable. Or if you're not willing to be adaptable, you need to spread yourself out as much as you can so you don't expose yourself to the risk that your particular strategy is going to underperform. So, it's not easy. And people who tell you it's easy are full of crap. Like somebody telling you, oh, you just put all your money in growth stock mutual funds. They'll be fine. It's just ignorant. And then they tell you, don't trust those Wall Street guys. They're a bunch of crooks. They're a bunch of scammers. Don't trust those Wall Street guys. Maybe that narrative is flawed. Maybe the Wall Street guys are actually trying to help, right? Maybe they know more than these people. I mean, it's super frustrating for me to watch this. And people are going to get hurt. People are going to get hurt because they follow bad advice from a guy who just doesn't know anything. Why would you take advice from a guy who doesn't know anything? This growth and value thing could be, and I could be wrong. We could, maybe this was a blip and maybe growth is going to outperform for another 5 years. I could be wrong. I don't know. But you cannot expose yourself to the risk that one particular strategy could be wrong. I'm Jared Dillian. This is the Jared Dillian Show.
Jared Dillian. Now you know a rich guy.